My name is Aaron Paul. I'm the president and CEO of Acquisition Finders, a specialized mergers and acquisitions firm based in Memphis, Tennessee. I wanted to do this short video introduction to our webinar, The Process of Buying an Existing Business, to give you a taste of what you're about to learn and also an understanding that buying an existing business is an outstanding alternative to going back to or staying in corporate America. My goal is that after viewing this presentation, you'll be better educated about the possibilities in the existing business marketplace and be able to determine if buying an existing business is for you. As you'll learn, there are hundreds of thousands of outstanding businesses available for purchase. However, you have to be proactive. You need to determine how much money you need to make, where you want the business located, and what industries are the best fit for your situation. Then you need to go out and find the businesses that match your criteria. It can be a daunting task, but this webinar is focused specifically on helping you determine your criteria, the process of finding businesses, and how to value and finance the transaction. After you've had a chance to review the presentation, I encourage you to call our offices and learn more about our services. We've helped a great number of individuals like yourself find good businesses at good prices. Enjoy the presentation, and I look forward to hearing from you.
Thanks for tuning into our webinar, The Process of Buying an Existing Business. I'm Aaron Paul. I'm the President and CEO of Acquisition Finders, and I'll be with you today as we talk about how buying an existing business is an attractive and viable alternative to staying in corporate America or going back to corporate America if you're an outplaced executive or manager. I always think it's good to start a presentation like this with a quote from a well-respected expert, and I can't think of a better expert than Peter Drucker when we're talking about small business. It is smarter, faster, cheaper to buy a business than it is to start one. I tend to agree with that philosophy, and I believe there are a number of folks who have been involved in startups that would agree with that. I know here at Acquisition Finders, we're a startup. It's been a number of years, so I guess we're probably a more mature business now, but it was very difficult to start the business from scratch, develop the systems, and do all the things that are necessary to develop a business and grow a business. When you buy an existing business, a lot of the groundwork has already been done, and you know if that idea or that particular product can be sold in the market, and you can make money doing it. So that's why I think buying an existing business is probably the key thing when you think about buying an existing business. Is it's a reduced risk, especially when compared to a startup or other types of businesses. The world of entrepreneurship, I want you to think of it like it's a three-legged stool, and the three legs are talent, capital, and opportunity. When we talk about talent, I think the key thing when you have the talent to run a business is that you have the ability to get along with people. You have the ability to get along with employees. You have the ability to get along with customers. You have the ability to get along with vendors. You've got to be able to get along with people. And I have found that that's the most successful trait that most very successful entrepreneurs have. It's not the best widget. It's not the best salesperson or anything like that. It's that ability to get along with people. The second leg of the stool is capital. You either have money or you don't. If you're doing a startup, it's maybe not as important to have a lot of capital, but when you're buying an existing business, you've got to have a down payment. You've got to be able to purchase the business, and we'll talk about how financing works and the amount of capital you would need to invest when you are looking to buy an existing business. And then that third leg is opportunity. And when you're looking for an existing business, this is probably the most difficult leg of the stool to complete. There are a number of businesses out there. There's a lot of opportunities. You just have to kind of go out and look for them. And that's what we're going to talk about a lot today, is the process of how you find businesses in today's market. So again, think of entrepreneurship as a three-legged stool. If you don't have any of the legs, any one of the legs, the stool is probably going to fall over. So it's a key slide to think about and a key graphic to think about. So just as you're thinking about entrepreneurship and if you want to buy an existing business, this is something that I really want you to consider. So why would you want to buy a business in today's market? The economy's going to pot from what everybody talks about. Tax rates are going significantly higher. But buying an existing business is actually a really good investment in today's market. It's significantly reduced risk than a startup, even a franchise, even a startup franchise. Buying an existing business, you know that the seller has been successful in selling a certain product or service in that geographic area or to that particular client base for a number of years, and you're paying for that success. But think of it as if you were buying something, you would buy a junk bond on the open market. You're taking more risk so that you get more return. That's very similar to what you would be doing when you buy an existing business. You're taking less risk, so you have to pay more for that risk reduction component of buying the business. So you're paying more for a business than you would with, say, a typical startup or something like that. It has existing cash flow. You know that there are sales that have been there in the past with the proven track record. So that's really a key thing, and that's what folks, particularly who have come from corporate America, are looking for is, can this business support my lifestyle, pay me a salary, pay any debt that I'm going to have to take on to purchase the business, and still have a surplus left? That's what cash flow is all about, and we'll talk more about some scenarios and some case studies on what's kind of out there in the marketplace today. SBA financing is very, very active right now. In fact, we're doing this at the end of 2012. I can tell you I've never seen rates as cheap as they are, and I've never seen banks as hungry as they are to purchase good businesses or to help you purchase good businesses. So it's very easy to get an acquisition loan. In fact, it's easier than a mortgage in today's market. Again, we talked about existing cash flow with an immediate paycheck. So the ability to take money out of the business basically the very first day. Immediate equity. That's another key thing is, as long as you don't mess the business up and totally run it into the ground in the first 6 months, more than likely you can turn around and sell it to somebody else. Maybe you sell it for more. You grow the business and you can grow the amount of equity that you have in the business. So that's one thing a lot of people don't take into account. As long as you don't mess the business up, you can probably turn around and sell it to somebody else, because good businesses always will have a market for them. Existing customer base. That's the other thing. It goes with existing cash flow. You don't have to start from scratch. It is an ideal time to buy a business. We'll talk about the demographics of what's going on in the business ownership world shortly. And then making that move from employee to employer. A lot of folks, you're just not cut out to be a business owner. And part of it is that you are on the hook every day for running the business and doing the things that are necessary to keep the business going. Some people are really, really good at that, and others are not. And so for you, I think it's time maybe to have that little bit of introspection and think about, would I be a good business owner? If I found a business that looked like this, do I think I could run it? Those are questions that you have to be able to answer for yourself. There's no questionnaires. There's no tests you can take that are going to give you those answers. It's kind of a gut feeling most. Now, some of the difficulties of buying a business. So, buying a business is great. Why isn't everybody doing it? Part of it is it's got more upfront costs, so it's definitely going to cost you more to purchase an existing business than do a startup. This is the reason I think most people don't find businesses, is that it's very difficult to uncover the right opportunity, which is why 90% of business buyers never actually find the right business. Due diligence is another reason that most people don't buy businesses, is once you get in there and start digging, you find a lot of skeletons in the closet, and you just aren't comfortable with the business the way it's been presented to you, and so you back out of the deal. It's an inefficient business for sale marketplace. There are 3,500 or 4,000 sell-side business brokers in the United States today, and that's where you would typically go to find business for sale listings. Many of those sell-side brokers have what I would term very marginal listings, in that they aren't attractive to people who have been in corporate America for a while. If you've been making over $100,000 a year in your job, and you're looking at buying an existing business, you need to make sure that existing business is going to pay you at least that, cover the debt service, and still have a surplus left in case things go badly. That's hard to do in the existing business business for sale marketplace that's out there right now, just because there's way too many marginal listings. So some questions you need to really think about asking yourself. So we talked about, why you'd want to buy a business, why wouldn't you want to buy a business. Some questions you really need to think about are, what types of businesses are most interesting to you? Do you want to be in retail? Do you want to be in wholesale distribution? Are you looking for business-to-business services? Are you qualified to manage a business? Again, I think you have to have that ability to get along with people. You've got to have that kind of ownership mentality. I'm not saying that you've got to go and do everything yourself, but you've got to be willing to take ownership of certain things that maybe you haven't done in the past in your corporate life, or you're not comfortable doing. That's where you really need to think about, are you qualified to own this business? A lot of that goes with adversity. Can you handle adversity without losing sleep? Sometimes you're going to lose a customer, and when you're in corporate America, sometimes that means you lose your job, and sometimes it doesn't. In the business world, the small business world in particular, a very large customer can mean the end of your business. I mean, you don't want it to, but that's definitely something that's there. So you have to really think about, how can you diversify the business? How can you grow a business without relying on one particular customer? Those kinds of things, and that will help alleviate some of this adversity and allow you to sleep a lot more. Are you willing to dedicate yourself to the business? That's another key thing. You don't have to be there 24/7, and you don't have to think about it 24/7, but you do need to be there. I always love it when people come to me and say, hey, Aaron, I want to buy a business that I only want to work, 2 or 3 hours a day, and maybe it's, 2 or 3 days out of the week I'm in there working, and I want to take out $100,000 and pay the debt and do all that kind of stuff. And that's all well and good, but to be honest with you, if I find it for somebody, I'm going to buy it myself, because that's the kind of job or the kind of business I'd like to have too. It's difficult to find something like that, so you're going to be working. In fact, you're probably going to work harder in the first 2 or 3 years of business ownership, particularly when you take over an existing business, than you ever did in corporate America. But hopefully you're in a business that you like, you love what you're doing, and it doesn't feel like work. And then at some point you can start to slow down, and that learning curve, it doesn't look nearly as steep as it did before. Do you have the skills necessary to grow a business? That's another thing. Marketing, I don't think you have to be the best salesperson in the world, but you do need to, again, get out there and see customers and grow the business and things like that. And then the last one is, do you know what a good business looks like? I can pretty much guarantee you don't. The good businesses are in the parts of town you don't necessarily want to go to at night. They don't look good from the outside, and even sometimes from the inside when you go in. But sometimes those are the best businesses. I remember we're here in Memphis, and I went to a business here in town in one of the worst sections of town, and pulled up, and iron gates all around the yard, and he had trucks all over, and I was like, golly, I don't even want to walk in here. Walked in and looked at his financials, and he was making almost $3 million a year. That's not sales. That's what the gentleman was taking home. And if you'd have driven by the place, you would have just pushed the gas pedal and tried to get out there as fast as you could. So definitely, you may not always know what the good businesses look like. So let's talk a little bit about the process of buying a business, because I think this is the key component for people. They just don't really understand what goes into it. So what we're going to make the assumption of is that you've already found your business, because that's a whole nother process before that. So let's talk about buying a business now that you've found it. How do you get to, what are the milestone steps of this transaction? So number one, what's it worth? So you found your business. What do you think it's worth? And think of this as like buying a house. The milestones are basically the same. However, it's just harder to find the business that you want to buy. So when you're out there buying a house, you'd say, okay, I want to buy a 3-bedroom house in a particular suburb of wherever you're at. And so you go, okay, that house is worth $250,000. Well, it's listed for $350,000. So the next step is you start negotiating. So very similar in the business space. You think you know what the business is worth. The seller thinks he knows what the business is worth. So you have to start negotiating. And that's really, people think it's a difficult step. It's really not. Most business owners are willing to accept a fair price for their business. And if they're not, then walk away and go look for another one, or go try to find a deal with somebody else, because there are plenty of businesses out there. Just like with the house, maybe the house you're looking at, maybe that guy won't negotiate, but 4 houses down, that guy's so ready to get out of his house, until you go in there and start talking to him, you just have no idea. So negotiations, they're not difficult. It's just part of the process. So the next part is, after you've negotiated a deal, just like with the house, after you've negotiated it and gone back and forth, you sign this final letter of intent and you structure that transaction. So when you buy a house, maybe that letter of intent says, okay, I'm going to buy your house for $300,000. I want you to leave the refrigerator that's in the garage, and I want you to leave the drapes that are in the living room. When you buy an existing business, that structure is a little bit different. Instead of it being things like that, it basically says, I'm interested in buying your business for $500,000. I need $100,000 in accounts receivable to transition. I need a non-compete from you for 5 years, and I'm going to look for seller financing of 10% of this transaction. So the structures are different, but again, the milestone is basically the same. So the next step is, after you have a deal, again, just like when you buy a home, when you have a deal, it's time to go out and get your financing. You can't really get pre-approved for a business loan in today's market. It's just too difficult. It is all contingent on the deal that you find. So what you want to do then is, again, this letter of intent is contingent on financing. So it's contingent on financing. It's contingent on an appraisal, just like a house would be. And it's also contingent on your due diligence. It's kind of similar to a home inspection. So the first step of that is, once you have a deal, go talk to your banks and start trying to get your loan set up. So then, once you have your financing in place, or pretty much in place, that's when it's time to start due diligence. So you would go in, you'd inspect the books, financial due diligence. You'd sit in there for a couple of days from an operational perspective and gather knowledge on the business and how it's being run. Those are the kinds of things that you do in due diligence. And then, so the next step is, number 6, you draft the contract. So now that you have the deal in place, you're comfortable with your due diligence, you pay an attorney, and they draw up the non-competes. They draw up the seller financing notes. They draw up the actual purchase agreement. Now, when you buy a home, those are usually boilerplate. But when you buy a business, those are very detailed agreements. There is some cost to having those done, but still, you want to make sure that you have a good attorney who's handling that, because this is a key component of your getting to closing in a timely fashion. And then number 7 is, if you've got your money approved at the bank and you've done your due diligence and you've got the agreements drafted, then you go into a room, you sign the paperwork, and the owner hands the keys over to you, and now you're a business owner. And so, like I said before, when we started this slide, the process is similar to buying a house. It's the part of trying to get to finding the business that you want to purchase. That's the more difficult part. So we'll talk about that here shortly. But why would you want to buy a business now? The average age of a U.S. business owner is 64, so they're all getting older. 97% of business owners have absolutely no exit strategy. So from your perspective, you are their exit strategy. And that's a key thing to remember as we talk about this going on the next few slides. You're the exit strategy. You're the only way they're going to get out of business. And they don't, believe me, they want to sell a good business. There's a lot of value in good businesses. But as we talk to more and more business owners every day, we start to hear that, if I don't sell it, I'm just going to have to shut it down in the next couple of years. And it may be a business that's doing $4 or $5 million in sales and has been in the marketplace for 30 plus years. The gentleman just doesn't have anybody to sell it to, or doesn't know anyone who wants to buy it. So again, you're the exit strategy. So that gives you a little bit of power in the negotiating part of this. There's 750,000 businesses that are projected to be for sale annually over the next 10 years. So there's going to be a glut of businesses for sale in the marketplace. There's a 2-for-1 baby boomer to Generation X ratio, which means that there's not enough kids to take these businesses over. And it's approximated there'll be 8 million business owners exiting their business by the year 2020. So again, I think if you concentrate your search on good businesses, that meet your criteria, and we'll again talk about how to target these businesses a little bit later. You're going to be able to find the right opportunity, and it may take a while. The way I always like to talk about it is, think of it as you've got this gigantic funnel and it's got a bunch of filters in it. And so what you're wanting to do is you're going to pour in all of these businesses that you find, and then they're going to make their ways through the filter, and you're going to have 5, 6, 7 drop through all the way, get through every filter that you'd put into it, and here are the 5 or 6 businesses that have made it through. You're going to pick one of those, and that's the one you're going to try to buy. If it doesn't work out, that's okay. You've got 5 or 6 other ones that have all made it through the filter, and so now you can try to negotiate and close a deal with one of them. That's what you have to do if you're going to look to buy an existing business in today's market. Is you've got to be open. You've got to look for more than one opportunity. And then interest rates right now are historically low, and by historically low, that is the truth. We are seeing rates right now, and again, this is December of 2012. We're recording this. We're seeing rates sub 6 from the SBA space, which is ridiculously cheap money. So again, great time to be looking. Today's typical buyer, if you're listening to this, more than likely you're a former corporate exec or a manager. You're typically in your 40s or 50s. You don't want to go back to corporate America, and you have a desire to control your own destiny. What I always like to tell folks is if you can, think of yourself as a tape recorder, and if you push play on your back, if somebody asks you, hey, so you think you want to buy a business, you need to be able to say, I want to be selfish. I want all my hard work and effort to benefit me rather than a shareholder or a CEO or some vice president that's above me. I want all my hard work and effort to benefit me and my family rather than somebody else. And if you can say that, then you're ready to be a business owner, because that's what I think you've got to be able to do. Today's typical sellers, 15 plus years in the business, making $250,000 to $500,000 a year. They are extremely burned out. They have growth opportunities but don't want to pursue them. That's what we see every single day. So they're out there. You have to go out and try to find them. So why do most prospective buyers fail? Again, remember we talked about it. 90% of people never buy a business, and the reason is it's an inability to uncover good opportunities. Maybe they're not really committed to the buying process. They think they're ready to buy a business, but they never actually go out and do anything. The other reason is it's an inefficient business for sale marketplace. You are relying on a broker to develop a listing or develop a relationship with a business owner to help to sell their business for them, and you're hoping that that broker finds the perfect business at exactly the right time that fits your situation. The numbers on that are almost impossible. The odds, when you think about it, are just almost impossible. We already talked about there are too many listings in unprofitable or undesired industries. So that's why only 20% of businesses that are listed ever actually sell. And actually, I think that number is still way too high. That's an estimate that comes from the industry. It is way too high. I think it's more like 5. I think that's all that ever actually sells. So how do you find a business to buy? You go online, the listings that are out there. So if I'm a business broker and I have a listing with a business owner to sell their business, I'll go out onto bizbuysell.com or bizquest.com and I'll list that business for sale. So those two websites kind of function as an MLS. There was a leading brokerage firm out there that has a ton of locations all over the U.S., 1,400 brokers assisted in closing 3,000 transactions nationwide in 2011. And so those odds are just way too low that you will find what you're looking for in the business for sale listings. You can also talk to CPAs and attorneys. I mean, if you're tied into that community, sometimes that works out. It tends to work out better for me. I'll have CPAs and attorneys call us at the office all the time, asking us about, hey, do you have anybody looking in Dallas, or do you have anybody looking in Chicago for a business? And the reason is because we've talked to them before, and they know that we help people find businesses to buy. And that's really the next way you would actually go out and find a business is you go out and actively look for it. So you have to be proactive. You can't wait on a broker to find a listing for you. It's just not going to happen. It's almost impossible. But you can go out and talk to business owners on a proactive basis and say, I'm interested in a business that looks like yours. I'd like to learn more about your business and see if it's a fit for my situation. If it is, I would like to make an offer and try to purchase your business. Are you ready to sell? That's what you've got to do in today's world, and that's how you'll find the best business for your situation. So let's talk about the types of businesses that are listed. At any point in time, there's around 45,000 businesses currently listed across the U.S. And what you're going to see, if you go out on the websites and look, and this is straight from their own statistics, food, beverage, and entertainment and retail-related businesses account for approximately 50% of the businesses that are out there. What I've found in my work with outplaced executives, they don't focus on those kinds of businesses. They are looking for business-to-business services, light manufacturing, health and medical, wholesale distribution, those kinds of businesses. And so what you start to see is if you go out and look, so let's say you live in Memphis, Tennessee, and you're looking for businesses to purchase. And the reason I say that is because I went out there the other day to look and see what was out there. There may be 30 businesses that are currently listed for sale, and I believe in Memphis we have about 15 active business brokers that I would term very active business brokers. There's around 30 businesses. So if you're in Memphis and you're looking for a deal, you've got 30 businesses to look at. And you go through that, and the next thing you know, half of them are retail, half of them are retail or restaurant related. There's maybe 15 that are non-retail businesses or liquor stores or convenience stores. And now all of a sudden you're down to 5. And now you look at those 5 and go, well, none of those are making as much money as I was when I was in corporate America. So none of those fit. That's what's happening in the business broker world. Those are the types of listings that you start to see a lot of. And that's why I personally feel like that part of the marketplace is broken. It's very inefficient, and I think you've got to be proactive and go out and find the businesses that are criteria. And we call that finding hidden gems. Our process, and this is something that you can do just sitting at home, profile yourself. Think about what kinds of businesses are most interesting to you. How much money do you have to put in? What are you looking for from a geography perspective? What are you looking for from an industry perspective? And what are you looking for from a financial perspective? How much do you need to make? How much are you willing to pay for a business? Where is it located? What industries are you open to? And so once you do that, then you've got your kind of ideal profile. And so then what you can do is you can go out to the Yellow Pages or to any number of list providers, because that's what we do is we'll pull an initial list for a client. It may have 1,500 businesses on it. We're trying to get them to narrow that down to around 500 that they feel best match their profile of what they're looking for. So now that you've done that, you found those businesses, you have to start calling them. You got to talk to them. They don't know you're looking to buy a business. They have no idea that you might be interested in their business, so you have to contact and follow up. We actually use a series of letters, emails, and phone calls to gather as many people to plug into that funnel that I talked about before. If we send out letters to a list of 500 that you feel like match your criteria, we're going to get anywhere from 50 to 100 people raise their hand and say, yes, I'm interested in selling, or no, I'm not. The no's are fine. I'd rather have a no than a maybe because they're off the table. We're wanting to get as many yeses as we possibly can. So once you do that, once they say, yes, I'm ready to sell, then you have to start qualifying them. You have to talk to them about, how much are you doing in sales? What's your profitability? What's the cash flow of your business? How long have you been in business? You start to qualify those businesses and see which one of those might be a fit. And so, again, if you're thinking about the funnel, it's the qualifying filters are what you're plugging into your funnel, and what you're going to hopefully have all those businesses drip through and have anywhere from 5 to 10 that you feel like are great fits for you. That's what you've got to do, because if you get it narrowed down to just one, guarantee you something's going to happen with that deal and it's going to fall apart. So you've always got to have yourself a backup. Again, we call ours the Hidden Gem Acquisition Search. You can check out our website and look at it in greater detail. But there are many business owners that will sell their business if you approach them. So you have to do this. You've got to be proactive. Most business owners won't list their business for sale. I can't tell you how many people I talk to on a weekly or monthly basis that say, hey, your client may not be a fit for me now, but hey, if you get another client in Memphis or another client in Philadelphia who you think might be a good fit, just let me know. I want to talk to them, but they won't let me list their business for sale. So it's an odd situation, and part of it is business owners want to keep this confidential, and so as you're approaching them, you need to keep yourself cognizant of that fact, is that, hey, they're not on the market, they're not actively listing this business for sale, they guarantee you they've not told any employees, they've got to keep this confidential, because what happens is the value of the business can decline because customers find out and they go somewhere else, employees find out and they go look for new jobs, vendors find out and they start pulling products and things like that. So you have to be cautious about what you're doing when you approach these folks, but keeping it confidential is really the key thing. And dealing with you on a one-on-one basis, that's what they like, because they know you're the only one who's looking. It's not listed out on BizBuySell or BizQuest.com. We've developed a process to find businesses that fit your criteria. We uncover those unlisted opportunities. We contact all those businesses, match your criteria, gives you the least amount of competitive pressure because these aren't on the market. You're the only one looking. Gets you down to the top 5 or top 10 businesses that are the best fit for you and your criteria and your situation. But it does take a while. We are actually speeding up the process quite a bit. We have a number of folks that are closing in 2 or 3 months rather than the typical 6. Some folks have taken longer than that just because it's, they're a little bit pickier, and maybe they're not as maybe their criteria has changed over time. Those kinds of things happen, but give yourself anywhere from 6 to 12 months to complete a deal, and you'll be fine. You'll be in great shape. This is the way it works. It's a very good formula, but it's definitely this is something that you need to take into consideration when you're looking to value the business. So now that we know the cash benefit to the owner, we've got a value driver. So what do we do to determine if it's do we multiply it by 2, or do we multiply the business cash flow by 4 to determine the value? A lot of that's going to depend on these items. Industry trends, type of industry. What's the competition like? What are the historical financial trends? Is the business growing? Does it have the potential to continue to grow? How developed is the customer base? Are there still lots of opportunities out there? How are the employees? Do they turn a lot of employees, or do they keep employees on for a long time? How long have they been around? Is it a seasonal business? All those kinds of things are going to determine where it sits in the range of between 2 and 4. And now we need to talk about financing. Where you get the money from. It comes from cash or personal finances. So maybe you've got enough money you can just buy the business straight with cash. Most of our clientele that we deal with, at least from on our private client side, is they tend to pull their money out of 401k and IRA retirement plans, because you can do that penalty-free to invest in a business that you're purchasing. There are some things you have to do to make sure that works out. We personally don't do that. We have a couple of firms that we refer that out to, but suffices to say, it is possible. You can do that without penalty. You can take out a conventional asset-based bank loan. Now, those loans, much harder to get. Those banks are still really tight with those kinds of loans, but they are really good with the SBA loans, and we'll talk more about that on the next couple of slides. Another source of financing for the business is the seller takes back a note. And I like this because you want to keep the seller on the hook. You want them to have some skin in the game. in order to, if you're buying the business, you want to make sure that the seller is tied to you financially so that he makes sure that he's consulting with you and transitioning the business so that you'll be successful. The only way to really do that is to have some seller financing as a piece of the business. So let's say you bought a business for $1 million and you put in $250,000 of your own money. We may ask the seller to carry a note for another $250,000, and the reason we do that is because we want to make sure he's tied to you. So that's definitely some way. That's an easy way to do it, and quite honestly, the banks like to see seller financing in any deal that they're doing. Small business administration loans, like I said, I'll detail that on the next slide. Private investors, maybe friends and family, somebody like that might help you buy the business. So let's talk about the SBA, because I think it is important. I'd say, again, on our private client side, I'd say 90% of our clients that we find businesses for actually will use the SBA guarantee to collateralize the loan. So the bank will loan you the money, but they make sure it qualifies under the SBA program. It'll help with any collateral shortfalls. In the current credit market, everybody talks about small business needing money. I'll be honest with you. Bad money does not need to chase bad businesses. And the ones that they talk about, the ones that are struggling, are bad businesses in general. If you have a good business, you're running it well, or if you're acquiring a good business that has been run well, I can almost guarantee you will find the money. There are enough banks out there within the SBA program who are providing acquisition financing. In fact, there's more banks right now in the SBA space than there were back in 2008. More and more banks are getting into it because the rates are better, so they're getting a better return on the money that they loan you. It's got a government guarantee component behind it. It's better than a mortgage. It's a more attractive loan for a bank to have on its books than a mortgage is. So banks are becoming a lot more active in the SBA space. So you can find financing. If you've got a good business and you've got some relevant experience, you're going to be able to get financing as long as you have that down payment. SBA lenders do like to see that element of seller financing, and the SBA will finance up to $5 million of a transaction. So at a 3.5 times multiple, that'd be a business with a cash flow of $1.5 million. So that's a pretty sizable opportunity that they'll help you with. So again, if you're coming from corporate America and you're really thinking about this, you really need to understand what can you afford to purchase. So this is where the finances come in. What do you need in salary from the business? Typically, what most people will tell us is they want to make what they made at their last job. So maybe it was $150,000, maybe it was $250,000. You need to think about that because that's the building blocks of how this is going to work. Does the business qualify for SBA financing? Certain industries aren't allowed. They don't like pawn shops. They don't like businesses that are in adult industries. So there's definitely some things that they don't like. Do you have relevant industry experience? Can what you used to do in corporate America help you in managing and running this business? You have to be able to craft your resume just like you would for a job. You have to be able to craft your resume so that it sounds really good for you as you would be owning that business. Debt service coverage ratio needs to be at least 1.3. We'll talk about that in just a second. And then what's your down payment? You're going to need at least a 15 to 20% down payment in the current credit market. You may even need up to 25, but it's in that range. That 15 to 25 range will help you get it done. So here's an example of what you can afford, and this is a very simple formula that I've used for years. I think it's a key thing for you to consider. So let's think about the salary that you need. So let's say you need $100,000. So let's double that. So now that number is $200,000. So that cash flow that you needed is that $100,000 for you, and then you're going to have that extra $100,000 to help pay for your debt service. So multiply what you need in salary by 2. That gives you $200,000. Then you take that and multiply that by 3. That's what you can pay for the business or thereabouts. Because what you'll find is that if you do 20% of the amount down, so in this case, let's say we've got 100,000 times 2, that's 200, times 3 is 600. you would need to put in $120,000. By the time you pay back your debt and the amount of money you've got to put into it, the next thing you know is you're going to be able to take a $100,000 salary, you'll be able to cover your debt service, and you'll have a nice little surplus that you can use to help grow the company or help pay off the debt a little quicker. This is a very basic formula, but I've never seen it not work. This is the best thing you can have from this presentation of, how do you find a business to buy and all those things. This is something that'll actually tell you, as long as I'm looking for something that looks like this from a financial perspective, I should be able to get the deal done. So it gives you that range of, value for the business with that amount of cash flow. It tells you how much you need to put in. All the questions that most people have, this formula can actually help you answer. So let's talk about a couple of case studies, and then we'll wrap it up. We had a client who had $300,000 to invest in a business purchase. He was interested in wholesale distribution and light manufacturing type of businesses. We identified over 70 companies which were interested in selling. We made a few offers. This is the whole thing why you want to always have backups. In the end, he purchased a fireplace mantle manufacturer which had an annual net income of around $300,000. The seller was 80 years old and had not been involved in the business on a day-to-day basis. We paid about $800 for that, and we financed that with an SBA 7A loan from a local lender. Great business, and I actually saw him the other day, caught up with him, and he is doing an outstanding job in that business, has grown the business substantially, and will probably double the size in the next couple of years. I mean, just has done anything and everything that could be done with the business and is just doing great. So definitely something for you to consider. Another client success story, $200,000 to invest. We conducted a search in our area, the Memphis area, B2B services along with wholesale distributions. We identified over 60 companies which were interested in selling, and he actually purchased an existing franchise location of a leading restoration company. Net income was around $300,000, and we negotiated a $575,000 purchase price. Not all deals are that good. That was a really good deal. But you don't know if you don't ask. And that's the thing about negotiating. I always tend to lowball, and I do an ultra lowball because I always want to know, sometimes the owner will just take it because he wants out so bad. And if he does, and it's a good business, and you're just catching him on the right day, more power to you. Take advantage of that situation and basically guarantee your success. So if you'll work hard and do the things you need to do, you'll be a successful business owner. So those are just some success stories. Definitely things that you can consider as you're thinking about this. Let's talk about next steps. You really need to think about your desire to move forward. Is it something you really want to do? Research businesses that are interesting to you. Assemble your team of advisors. You're going to need a CPA. You're going to need an attorney. You're going to need insurance. You're going to need those kinds of things. So be thinking about who you might want to bring in. Develop and implement a search acquisition process. Sometimes people use an intermediary, and that's what we do is we work with you to quarterback the process of buying a business. We're there to help you do your due diligence. We're there to help you negotiate. We're there to help you with your financing, help you get the documents done and get the deal to closing. We act as kind of your team leader in this project, or project leader is the way I'd like to think about it. We're there at all steps along the way to make sure that we get a great business at a great price for you. So that's when we talk about acquisition process, that's what we're talking about. And then give yourself time to uncover the right opportunity. Again, sometimes people buy the very first business that calls in. We'll have a client call, a client that we're doing a search for, and the very first business that calls in is the perfect fit, and we know it's a perfect fit, and we get it done really quick, and everybody's happy. And then sometimes it's the very last business. So you've always got to give yourself time. You always want to make sure that you're looking at other opportunities, because sometimes business owners just flake out, and sometimes you'll flake out. You just get nervous and you don't want to do the deal. It's okay. You got to have backups, and that's what this process is all about. Is not just looking at one business, but looking at multiple businesses to increase your chances of finding the right business that you can get a deal done with that you feel comfortable with. So again, give yourself time, really think about the kinds of businesses that you want to deal with, the kinds of businesses you're most interested in, and then think about this. Today's small business climate makes this an opportune time to buy, and that is the truth. There are so many people that want to sell their businesses today. You've got this whole slew of people that are in their mid-60s and their kids don't want it and they can't sell it to employees because employees don't have any money. This is opportunity for you. I think there's going to be tons of consolidation in the small business space over time. And if you're one of the ones that buys a good business and takes over competitors, and maybe you become other people's exit strategies, you can turn a business that's doing $2 million into a business that's doing $20 million, or a business that's doing $3 million into a business that's doing 10. I mean, and really grow your own wealth and your own income along the way. So I think that's a great time to buy. I think it's going to turn into a last man standing type of scenario, just because so many people are so much older and they need to get out of these businesses. So again, definitely a great time. This is us. This is Acquisition Finders. Feel free to contact us. We'd love to talk with you. We can answer any questions that you have. We offer a complimentary consultation. If you're interested, just send us an email or send me an email. We'll send you a copy of our questionnaire and kind of our initial workbook for you to go through, and then we'll set up some time to talk. And if you feel like there's a fit, then we'll take the next steps after that. Worst case scenario, I hope you've gotten a lot of good information out of this and enough to help you make the decision if buying a business is for you. That's really what the goal of this is. And if you decide that it is for you, that buying a business is for you, and you're ready to take the next steps, just give us a call or send us an email, and we'll be in touch, and we'll take the next steps from there. So I hope you've enjoyed this, and thank you very much for tuning in.